Are you spooked by this real estate market? Maybe it's not so much the real estate market, but it might be some scary data points like 5 million jobs less than we had in 2019. Do you think inflation is only 3 or 5%? Also supply chain issues, lumber prices. I think these are pretty scary numbers. How is holding up the housing market? Austin has obviously no problems. We're talking about 50% increase within a year, but I think that is pretty scary because that does not have any underlying basis of why this price is going up. And maybe because everybody moved there before Tesla opens up their new plant there. And obviously that will always support any market that businesses are moving in and creating well-paying jobs. So that might not be scary. By the way, my name is Lenska. I'm with Lenska Realty. I do ADU consulting and feasibility studies for design and build and also for manufactured houses. I'm a real estate broker and offer plenty of educational events and also like this small little market update. And you can always be sure I work myself to the bone to get the job done for you. Let's go back to Austin and look at it, because Austin certainly has shot up, and how we value a market and if it's expensive or not, we look at the median home price compared to the wages. So, and that is what we call the VE ratio. It is currently in Austin about 9%. Do you guys know what it is in San Diego? It is 10. So Boston is nearly as expensive as San Diego, which means now Austin is nearly as expensive as San Diego if you're looking at from an affordability point of view. And how does San Diego fare? So people always move to Austin because they think the technology and business is there. But if you're looking at the VC investment and into tech startups, obviously still the winner is San Francisco, followed by New York and Boston. Los Angeles, San Jose, and look at that, San Diego is doing pretty well. It's probably also part of our biotech industry we have. And Austin, Texas is only 3.6 billion. And looking at the highest appreciation market, all right, we won't find San Diego on it because we'll tell you in a minute what the appreciation was. But Boise, Idaho obviously leads the pack in 2021. Now, Phoenix, Arizona is also actually within that, should be within that table in 2021. It's not like 45% like it was in 2005. But if you compare the appreciation compared to what it went down in the crash, obviously we only have right now the 2007 and 8 crisis. You can see what goes up must come down. And looking at Boise, Phoenix, and Austin, right, actually Boise and Austin right now, I think it rather looks scary. And we see what happened in Riverside in 2005, went up 32% and went down 52%. So thank God San Diego is not on that list. So let's take a look what San Diego is doing. For the September key statistics, so we actually did 15.4% appreciation on the median home price, and practically the same for the detached and attached, with the median detached home price at $860,000 and the median home price attached $565,000. Currently, we're average price per square foot in San Diego is up year over year 21% and at $540,000. So days on market is still very short. The homes are still selling within the first 2 weekends. It slowed down a little bit in most of the neighborhoods. So pending sales are plugging along at increase of 12%. But remember, we're coming of 2020, which was kind of an abnormal year. But the sold listings, you can see it's down 17%, and the sold listing attached is also down only -2%. So the attached units were moving a little bit better. Obviously, if you look at the price point of 565,000, that's definitely a first-time home buyer purchase, right? So you guys see from January right up, we practically went up until June, but then since June we're actually hovering around that 750, which is all normal for seasonal. So that shows you right there the average closed price compared to the original price is back down to 101.1%, because the craziness of the multiple offers has actually stopped. So if you're in the middle of a fix and flip and you still think the market will bail you out, it ain't so. As you guys can see, we leveled off on the price, and we also don't have a lot of multiple offers situation. But still, the inventory is down, and it is still less than 1 month. It's about 24 days, which does put pressure on upward pricing. But not only home prices are increasing by double digits. Globe Street says apartment rents continued their upward tear, which is true. We have seen an increase in apartment rents. So, and coming back to the scary inflation, which I think is higher than for most people that they're feeling it, because how they're measuring the CPI, the rent measure in the CPI is they go by owners would be renting for. Okay, so obviously that's kind of what you get for the answer. But if you're looking at apartment list, how prices shot up right here, and also Zillow observed that rents went higher. So the actual cost and the actual inflation is higher than what the measured CPI is. Don't you think that's scary? But don't worry, you are in real estate and no need to be spooked by inflation, right? Maybe yes, because increased property values, yes, for sure. But during inflationary periods, there's always a higher demand for hard assets, right? Because you want to hedge against inflation, and you have appreciation, and you will also have rents that are going up with the inflation. So usually that leads to less supply, and which puts even more pressure on upward pricing. But it also increased, like we have seen, material and labor cost as going up. So that which disincentivizes developers from building new properties and limits supply, this puts a premium on existing high quality property, which reinforces the fact that sellers can unlock more value out of their real estate. Now, when it comes to the borrowing cost, the cost of borrowing is typically impacted during inflationary periods, as inflation devalues the currency and forces lenders to raise interest rates. So remember, only things that we don't expect are scary. So if you are putting a budget together or a purchase, and hopefully you're not on a fixed interest, you are on a fixed interest rate, but rates could be going up, which actually right here, I was just talking about it. So we cruised along with under 3%, but currently the 30% is up to definitely over 3. But if you're looking at the 15-year, that's still a pretty good deal. And if you want more info, Meredith is always great to work with investors and homeowners, and also has great ADU financing. So just to talk about what people what attitude they have towards housing, we're looking at the Home Purchase Sentiment Index by Fannie Mae. And usually that is an index that's set together out of 6 components. Is a good buy time to buy and sell, and will home prices and mortgage rates go up and down, and how is your financial situation? So in September, look at that, we're down again 1.2 point, and we are not going up. So we're kind of could you call it we're stagflating in the home purchase sentiment. But what was really contributing to the 1.2 point downturn? Actually, more and more people are disgusted by the high home prices, and which makes buyers not very exciting. So in order to provide a little bit more dramatic graphic, the blue time is good time to sell, and the dark line is the good time to buy. So you see, as much as home prices went up the other way, the good time to buy went down dramatically. And the difference between a good time to buy minus a good time to sell is that gray area, which is the lowest. So, and when we're talking about what else could be scary in the future, remember the 2007 and 8 crisis started with a lot of household debt that you can see in that red line. Now, look at that. Households are actually trying to deleverage, okay? Getting rid of debt and not loading up on their credit cards, not purchasing stuff. So is that really inflationary? That sounds a little bit more deflationary to me, to households. But then if you're looking at government debt, I don't have to tell you the trillions we spend. And also for business, there are more indebted. So can we see a debt bubble here? But you're always looking for answers and ideas to overcome debt, affordability, and low inventory. I'm sure this is one thing you have not looked at. Manufactured housing. Lately, the mainstream media has been picking up on that this is really a way to do affordable housing options. So you have a lot of positive news coming out from from the big media. And it's also losing a little bit the stigma it had finally, because I truly believe this is the great way of getting more houses and quicker, and also for a better price. So it's really working towards debunking some of the misconceptions about the quality of construction, that you are able to customize it interior and exterior. Right now, the financing options available have improved just in the last 3 weeks. And then we always hear that manufactured homes don't appreciate. Hold on, don't turn this video off yet, because I want to show you a graph that will blow you away. And right now, with all the ADUs that we're building, ADUs, manufactured home as an ADU, if you already have a tenant on your lot, you don't want a 9 months construction. These homes, manufactured homes, can be delivered and installed within 2 weeks. And I have actually known people that did fix and flip on manufactured homes. And don't forget, mobile home parks as an asset class is really gaining some more importance. So save big on small spaces, and more to come on that, because Crest Homes, I'm working with Crest Homes, and they're a local company, so check them out. Here it is. Manufactured home price appreciation is 14% year over year. Remember how we started in San Diego? What was the appreciation on the median home price? It was 14%. So everything they tell you, it is not true. Median, they are appreciating. And not only that, who is the winner? During 2010, if you bought a house, for 400,000, you doubled practically your money to 860. Now, when you bought one here for 50,000, a manufactured home, and currently it's 250, that's a 500% increase, right? Okay, you only made 190,000, but if you bought 8 of them, because 400,000, for 400,000 you could have bought 8 of the manufactured homes, you would have made 8 times 190,000. I thought that was interesting, and if any of the viewers have done that, please let me know. Don't be scared to join us every third Saturday of each month at our real estate investing field trip, where we get together and get educated about real estate investing and how to make the most of our most important investment, which is your home. Currently with ADUs, SB 9, SB 10, you need to know about it. So come and join us. Thank you for listening. Don't forget to subscribe and check us out on Meetup.